Good morning and welcome to the Big O Money Show. Andrew Galvin here as your guest host. And then always with me is Doctor or plays a doctor on the radio, Tony Shore. Tony, how
Yeah.
we doing?
Yeah, I'm not a real doctor, but I do play one on the radio, Dr. Tony Shore. Just like Dr. Johnny Fever, Dr. Demento. I don't know if anybody out there are listening have heard of Dr. Demento, but he just recorded his final show. Barry Hansen from Minneapolis originally,
Wow.
and then he moved to LA and did the Dr. Demento show for so many, I think 55 years he did
Wow.
that show. He's finally retiring.
He's done.
And he's the one who found and broke and made famous Weird Al Yankovic and numerous other artists. So,
Wow.
yeah.
That's cool.
Novelty hits, great guy. Met him a couple of times. He was my inspiration to become a radio announcer. So,
Wow.
yeah.
That's great.
Little trivia for the kids,
Yeah.
along with Otis 12 and Diver Dan Doomy from Z92 and a lot of Omahaians, as I like to call them,
I think
Nebraskans.
they remember them. Yeah.
Hopefully they'll remember Otis 12 and Diver Dan Doomy. For our seniors out there listening, young kids like you, Andrew, you're a little too young for Otis 12 and Diver Dan
I
Doomy, but you
know.
should look them up. All their bits are online.
Are
Space
they?
Commander Whack, which is a series they did, and the Mean Farmer Show, which was great.
Yep.
My favorite episode of the Mean Farmer Show, Why Do Chickens Hate Snowblowers? You know they do. That's what the Mean Farmer. I fire up the Toro, and that peaceful white blanket of snow muffles the barnyard, and I fire up the Toro and head for the chicken coop. It's a bad one.
Yeah.
But anyway, yeah. So how have you been, Andrew? What's going on in your life? How are you and Andrea and the family getting along?
Yeah, we've been good, been busy. Tony, I don't know if you realize this, but we're halfway through October basically already. And
Nutty.
we're fast approaching the end of the year. So
the years go by fast.
Yep.
And sometimes the days and weeks can seem long, but the years fly by. Isn't that nuts?
Yep. And it's funny because, I am a little bit younger than maybe some of our listeners, obviously. You
Me? Yeah. I love how you're kind of easing into that. I am a little bit younger than you're a lot younger than I am. Yeah.
There we go. Yeah. I'm younger than most. And
just say it. I'm old. You can say that. You can say that. The kids
I wasn't
out there
know
know that.
Like that, yeah. Tony. But yeah. But even at my age, I feel that, day by day, there's a lot of things that, and I think this is true with anybody, right? You just get so wrapped up in that day to day. And then before you know it, the week's done. You're looking forward to the weekend. The weekend goes by pretty quickly. And before you know it, that's just another week gone off the calendar, right? And so it can be very beneficial for individuals as they approach the end of the year to kind of look at some different things with their portfolios, look at some things with required minimum distributions, look at charitable giving. I mean, there's any number of things, Tony, that you can take advantage of during this time. And especially as we go into the November, December, people tend to get a little bit of a break as we go into the end of the year. So I kind of like to talk through some things with you today and give our listeners a few P's and Q's, if you will, Tony.
Yeah, well, I think that's a great idea. A year-end financial checklist, what to do before the end of the year. And now is the time. Don't wait. Because the rest of the year will fly by.
Yeah.
And next thing you know, it'll be Christmas. And then you hit the holiday season, it's too late, right? I mean, then life gets hectic for all of us. So I think this is great. What's the first thing on that year-end financial checklist, Andrew?
So number one, I think for most retirees, we start to hear from them about this time of year. Well, when do I need to take something about an RMD? Have you heard about this? Do you know what it is? And Tony, RMD is simply an acronym for required minimum distribution. And it's something that at age 73, individuals who have contributed to a pre-tax retirement account like a 401k, traditional IRA, maybe a SEP or a simple, they have money that's been contributed over the years, right? And so the IRS says once you turn 73, and prior to that, it was 72, 70 and a half. There's been different ages as we've gone through this. but basically the IRS wants to tax you on the money that you got a tax break for contributing to it in the first place, right?
So all that 401k money and IRA money, you have to take required minimum distributions. And if you're past 70 and a half, you should look, okay, have I been past 70 and a half since before it changed?
Yep.
If you're 73, you got to make sure you're doing this right, because there are bad consequences if you don't, correct?
Yeah. And they changed the rules a little bit. It used to be a 50% tax
Oof.
on this
Penalty. The
distribution.
50% penalty, 50% of the money you were supposed to take out, you had to pay in addition to the taxes, which is fully taxable, right, at your full
Yes.
tax rate.
Yeah,
Oh,
and then they dropped that a little bit. It's now 25% penalty, but still most people don't necessarily want to pay the government any more money. I don't want you to pay the government any more money.
yeah.
So
Even
it's
if you
just
catch it right away, it's 10%. They can be lenient, and I know if you work with financial advisors like you guys can talk them sometimes down to 10%, but it's going to be at least 10% if you don't take it on time,
yeah.
right?
Yeah,
Yeah.
it's just we don't want to do it. We don't want to get
No.
into a situation where somebody has to retroactively pull it out. And then the other thing that can happen, Tony, is if we miss one year, well, guess what? You have to pull it out the next calendar year still.
Right.
And we also have to make sure that we're then pulling out that current year's required minimum distribution.
And then
So
you're in
we
a
can
tax
double dip it.
bracket. Then you're bumping yourself up into a worse tax bracket. So you have
Yep.
to be careful. One strategy with RMDs is maybe take a little bit out even before you turn 73 as you go,
Mhm.
so that doesn't build up. Whether you need it or not, maybe start taking withdrawals earlier so you spread the tax burden out. But there are a lot of strategies. So a year-end checklist item, make sure you know what your RMD, required minimum distribution situation is if you have
Correct.
traditional IRAs or
Mhm.
401ks, tax deferred employer accounts like that.
Exactly,
Yeah.
exactly. It doesn't apply to Roth money. So if you have Roth money or you've been doing Roth conversions, you're
Yeah,
trying
if
to
you have
get
Roth IRA, you don't need to worry about required minimum distributions,
yeah.
or Roth 401k. Yeah. Okay, so what's next?
Well, and that kind of leads exactly into what I was going to say next, Tony, is, for individuals, if it's maybe been a little bit of a rough year, we're in a transition year from one job to the next. We had, maybe in years past, we've earned X, and this year we've only earned 75% of that we have in normal years. Maybe there's the opportunity for, a Roth conversion to get some of that money that has been pre-tax that you've contributed into the Roth bucket so we can kind of get in front of some of those RMDs, because it's not going to do anything different to your tax situation for the year if you have a little bit of wiggle room in your tax bracket, right? You've been earning, call it 110,000, and this year you only earned 90. Well, that means we have a $20,000 difference, right? That we can use to move some money from the pre-tax over into, the tax-free bucket in the Roth. So that can be another advantageous thing to look at for individuals if they have had a little bit of a change this year, whether it's employment or maybe somebody had to stop working because of some situation or another at home. So that's definitely something we want individuals to potentially take advantage of,
Mm, okay.
because what the taxes are today. We don't know what taxes are going to be 5, 10, 15, 20 years from now when you have to take those RMDs, right?
Good point. And eventually taxes have to go up because of
Have
that
to.
huge deficit and all the programs and spending that the government's doing at this point. Yeah. So
And it doesn't matter, we hear from people sometimes, Republicans did this, Democrats did this, and I'm here to tell you both political parties spend money and nobody's been able to write the budget in 30 years.
they've been kicking
So
that can down the road.
right.
Yeah.
And so taxes, I think, are just obviously eventually going to have to go up to cover that spending.
Yeah.
So
Yeah, and things can change rapidly on that front.
yes,
Fortunately, we got the tax brackets. We kept the lower tax brackets, and
that's right.
Hopefully that helps people out right now, which makes Roth conversions a good move right now, probably.
Yep.
But so for the end of the year, what else do we need on that financial checklist? What should we be doing regarding our finances, Andrew?
So the next thing we want to talk about, Tony, is kind of going back to that RMD conversation. One of the things that can happen is, if you have to start pulling out those required minimum distributions,
Mhm.
obviously it increases your tax load, right?
Yeah.
Well, if you don't necessarily need the money, then maybe it's advantageous to look at doing a charitable gift or two. Um,
Ah, charitable contributions,
yes,
qualified charitable contributions with your required minimum distribution. So you
that's
don't
correct.
have to pay tax on the money then, right?
Yep.
Because you're giving it to a nonprofit like a church, right?
Right.
If you tithe to your church, instead of giving every week or every month, give once a year. And instead of writing that check, which is you've paid tax on that money, use pre-tax money so you don't have to pay tax on that contribution.
Yep. Yeah, and it basically works that you don't take the distribution to yourself and then give it to the charity.
No,
You want to make sure that that check
the
gets
direct
sent direct to the institution.
from your account. Yeah,
That's correct.
from the RMD or from the IRA or yeah.
Yeah. So like when we do it, we have paperwork that we fill out with Charles Schwab. We send it to Schwab. They cut a check and they make it payable to that institution. And then they send that check directly to the institution, Tony. So that way there's no middlemen. It just goes direct to the charity. And then at the end of the year, when you get your 1099, there'll be a section there that basically tells your tax preparer, hey, I gave this amount to a charity. And you also want to keep those records for yourself as well, right? You obviously don't want to just rely on the company to give that information to your tax preparer. And,
Sure.
and most people will get receipts, or you'll say, hey, I've got this charitable distribution that I did for you. Can I give a receipt from the company or the charity, excuse me? But you just want to make sure you keep track of that, because
Yeah.
I have seen it sometimes where the 1099 isn't always 100% clear on that. And so it's very important, if you are going to charitable gift, make sure that you yourself have a receipt or something that shows that you did indeed give that charitable gift, right?
Right. Right. And that's really important to keep track of that. And again, this is why I work with a financial services professional. That's what you guys do there, and can help our listeners with this so they don't have to worry about any of this. People think, oh, this sounds complicated. Nope, not if you're working with, Premier Advisory Group, right? You guys
Yeah.
got a team there. You have
Yeah.
tax professionals, you have attorneys, you have financial advisors,
Mhm.
certified financial planners and advisors. I think that's really good. Okay, so the RMD thing, we've talked about that. We've talked about charitable distributions and contributions. You want to make sure those are made before the end of the year to
Mhm.
to get the tax advantage this year,
Yep.
in this calendar year. What next?
So the other thing that we run into a lot during this time of year is, people start looking at traveling for the holidays, Tony. And when you do that, you kind of start thinking, well, gosh, what happens if I get into a car accident, or I have plane trouble, the plane falls out of the sky, and not necessarily that that's going to happen, right? But I've heard from clients that, oh, I got on a plane last week and I really thought, hey, I need to update my will. Hey, I need to update my trust. Hey, I need to change beneficiaries that are listed on my account, right? And that's something that, as we approach this end of the year, I think it's very beneficial for individuals to sit down and make sure that who they want to have their money, their accounts, make sure those individuals are properly listed on their IRAs, their brokerage accounts, whatever it is, right? It could even be bank accounts. Hey, we need to do a transfer on death or a payable on death beneficiary on our bank account to make sure if something happens, somebody's able to continue paying the bills until we can get the house sold.
Yeah.
Those types of things, right?
Yeah,
It's
and you can go down to your bank. I think you have to do it in person. My wife and I did this, but most people don't do this, and they should. Is go to your bank, and if you have savings and checking accounts or whatever accounts you have at your bank, your
Mhm.
CDs, you can put beneficiary designations on bank accounts, and
Yes.
people, that's not automatic. They'll just give you a little form. You can fill it out right there
Yep.
and add that sign it, and they sign it and stamp it, and then you have a beneficiary attached to your bank account should something happen.
Right.
That is so critical. It's a critical part of estate planning, and most people, I know, don't do that. And if you're working with a good financial professional like yourselves who have estate planning attorneys that you work with, you're going to tell people to do that. But that's really important, and do that before the end of the year. Beneficiary designations, if something should happen to you, now's the time to double check those, isn't it?
Yeah. Yeah. No, it's something that we want to make sure that those have been changed, and especially as you sign those documents, if we're creating a will, if we're creating a trust,
Sure.
does the attorney tell the financial advisor that that needs to be changed or that happened? Well, not necessarily, right?
No.
I
Yeah.
mean,
In a lot of cases, no.
unless you tell them to, and even if
Yes.
you tell them to, sometimes they're kind of like, well,
They'll
that's
tell you.
on you.
Yeah. So make sure your financial advisor knows that you've done that if you're not working through them or their person directly. And I think that's really important, obviously. But beneficiary designations, people think, well, I set those. They're fine. I've got those. But things change: marriages, deaths, divorce, births, all of these types of things. Life happens once a year. You should review those before the end of the year, is what you're saying.
Yeah, yeah, and this is the perfect time to do it. Kind of schedule that year-end review with your advisor. Make sure that those things are your T's are crossed, your I's are dotted. Don't wait on some of this stuff. I was talking with Bill the other day, and I said, Bill, I know we talked about that about 6 months ago. Still haven't done it. Need to do it. I'm just as guilty as the next person, right?
Sure.
And I know life gets busy, but don't be that person that procrastinates.
Don't put it off.
Don't put it off. Everyone's busy. There's any number of reasons not to do something, right?
Sure. Oh, yeah.
But there is always one reason to do something, and it's because it needs to get done. And so
Yeah.
just do it.
Yeah. Just do it.
Yeah.
Just do it. That's good. Well, and we all are guilty of it. It's human nature to put things like that off, especially
Absolutely.
thinking about I'm fine. I'm young. Nothing's going to happen to me.
Yeah.
Famous last words, unfortunately, life can happen. So you've got to make sure you've got your ducks in a row. You don't want to leave your loved ones in a bad situation. What else is on that year-end financial checklist?
So then the next one here we've got, Tony, is something I think we talk about all the time, but I think it's incredibly important, especially at the end of the year, because you talk about rebalancing the portfolio. You talk about, making sure your allocations are correct for your risk tolerance, for your age, whatever the case would be. But throughout the year, as you have the stock market going up and down, those allocations are going to get thrown out of whack, right? I mean, if you've got 50% of your assets in growth assets and 50% of your assets in maybe a bond portfolio, fixed income, money market, what can happen is over that year, growth starts to creep in a little bit more to that other side of the portfolio, right?
Sure.
Because, if it's growing, that means the portfolio is going to then be out of balance with your allocation at the start of the year. So maybe it's 60% growth to 40% fixed income, right? And so now's the time to sit down with advisors and make sure that your portfolio is staying in tune with your risk tolerance, staying in tune with your plan, because otherwise it gets way out of whack. And before you know it, let's say next year's a down year. Maybe it is, maybe it isn't, but let's just pretend that it is. And the stock market loses 25%. Well, if you're allocated 50% to the stock market versus 60%, your portfolio is probably going to change a little bit more, right? If you're 60% allocated to the market versus that lesser allocation. And so it can be very beneficial to sit down end of the year with your advisor and say, hey, where are my allocations? Should I pull back? Should I take some profit? It's been a good year, Tony. I mean, we're up 13 and a half on the S&P 500. NASDAQ's up about 16, 17. Dow's up 9%, through the year, um, approximately, right? Those aren't exact numbers, but I think that's, definitely it's time to start having those conversations. And if somebody listening says, wow, that's actually a really good point. I don't know if I've done that or any of the other things that Andrew and Tony have talked about today, feel free to give us a call. 402 557 6730. Justine will pick up. She's the friendly voice that you hear first on the phone. She'd love to get you on our calendar. Let's sit down. Let's talk about those allocations. Let's talk about the beneficiaries. Do we have RMDs that we haven't taken yet? What do we do with them? Do we need to do some charitable gifting? Do we just need to do some gifting in general, Tony? That's the other one that we haven't talked about that probably most people, as they get to the end of the year, they start saying, well, hey, did the kids maybe could they do with a little bit of extra cash? We got the grandkids. Do we want to go to Disney World? Whatever the case would be, right? And it's really important to sit down and make sure you understand the financial ramifications of doing some of those things. So,
yeah, good point. I have a question about your last one though. Looking at your portfolio risk levels,
sure.
that's you've been talking about why that's important to do before the year end, or do at least once a year update your allocations and talk with your advisor about where you're at. It's not just that things change within your portfolio because of what the stock market is doing, but
That's
it's
true.
also our personal risk tolerance can change over time,
Mhm.
right?
Yep.
So you might want to reassess your thoughts on that, your personal situation. Sure, things have changed out, between the big beautiful bill. There's changes to tax laws, there's
Yep.
changes to the markets, to interest rates. But on a personal level, you have a personal risk tolerance. You want to find out what your own personal risk tolerance is, and maybe you did that when someone started working with you, or you've done that before, or you feel like, oh, I've always been this way. But things can change, and you might want to reassess where you're at, right?
Yeah. Yeah. I mean, because I'm not the same person I was 1 to 5 years ago with regards to risk, Tony. And
Yeah,
I can only imagine as individuals get a little bit older, it's even probably more so a sticking point, right? Because you have to start turning your life savings into a stream of income when you're retired
yeah.
and you're on a fixed budget, things aren't getting any cheaper necessarily. And so it just is one of those things you have to make sure we're tuned in, we're dialed into what an individual wants in order to make sure we're meeting their financial goals and financial objectives.
Yeah, that's
So,
really important. So a big one is, rebalance. Look at
yeah,
where your allocations are at. Go back over that with your professional, and have a plan. You're talking about retirement income plans. Things change. Like, oh, we've decided we want to take the grandkids. You mentioned a trip to Disney World or
trip to
something,
Disney World.
and we want to do that next year. Well, now is the time to say, oh, that changes our overall financial plan and investment plan and retirement income plan.
Yep.
Can we do that? Is that worked into our plan, or do we need to look at it?
Yep.
So yet another reason, I think a big one then, a big item on the year-end checklist is schedule a consultation with a trusted financial professional, a fiduciary,
Yep.
and especially one with a team that covers all the areas you're going to need: Social Security, Medicare, healthcare costs,
Yes.
and all under one roof. There, wouldn't you say that's one of the big items on the year-end checklist?
Yeah, I agree 100%, Tony. When you work with us, it's not just me. It's not just Bill. We've got Jake. We've got Bill Kaiser on Medicare. We've got Brenda on Medicare. We've got Julie as our CPA in house here. Andrea is our estate planning attorney. So when individuals come in to talk to us, you get the team. And I don't need to do anything more than walk next door to the next office over and talk to Julie if I have a tax question.
Yeah, it's
So
nice.
it can be very beneficial for individuals.
Yeah, that's huge. Well, hey, we're out of time for today's show. It flew by, Andrew, of
Yep.
course. But let our listeners know one more time how they can get a hold of you and set up that no charge, no obligation consultation.
Yeah, give us a call, 402-557-6730 right here in the Big O, or go to our website, www.paradvisor.com.
Yeah, or you can just go to bigomoneyshow.com as well. That's a great website. It'll take you there to Par Advisor as well. Great show today. That does it for today's episode of the Big O Money Show with our host today, Andrew Galvin.